Every second somewhere in the world, a card is being swiped. A phone is being tapped. A payment is being approved. Behind that simple moment is one of the most powerful money-making machines ever built. A company that does not lend money. A company that does not issue credit cards. A company that does not care if you pay late. Yet this company earns tens of billions of dollars every year, quietly, efficiently, and relentlessly. That company is Visa. Today, you are going to learn how Visa makes money, the financial secrets most people never hear about, and how this company built a business model so powerful that even banks depend on it. Welcome to How Companies Make Money. If you want deep business knowledge, real financial insight, and lessons you can use to build your own empire, make sure you subscribe, because this channel is designed to change how you see money forever. Now let us begin. The story of Visa begins in the year 1958. America was growing fast, consumer spending was exploding, but payments were slow, messy, and risky. People carried cash. Checks bounced. Banks struggled to track transactions. That is when Bank of America introduced a revolutionary idea called Bank AmeriCard. The concept was simple but powerful. Buy now, pay laters. Merchants get paid immediately. Banks earn fees and interest. The idea spread like wildfire. But success created a problem. Too many banks. Too many systems. Too much chaos. So in the year 1970, Bank AmeriCard was reorganized into a cooperative network owned by banks themselves. That network would later be renamed Visa. The name was chosen because it was short, universal, and instantly recognizable in any language. That single branding decision helped Visa become global faster than almost any financial company in history. Visa was not built by one founder. It was built by banks working together, something extremely rare in capitalism. The man who shaped Visa's philosophy was D. Hock. D. Hock believed competitors could cooperate to build shared infrastructure, then compete on top of it. Visa became a neutral platform. Banks competed. Merchants competed. Countries competed. Visa simply collected a toll. Here is the secret most people never learn. Visa does not lend money. Visa does not issue credit cards. Visa does not carry consumer debt. Banks do all of that. Visa simply runs the payment highway. Every transaction that moves across that highway pays Visa a small fee. Small fee. Massive volume. This is one of the most profitable business models in history. Visa has four major revenue engines. Every time a transaction happens on Visa's network, Visa charges banks a service fee. The more spending happens, the more Visa earns. It does not matter what the economy is doing. As long as people spend, Visa gets paid. Visa operates one of the most advanced financial networks ever built. It authorizes transactions, clears payments, settles funds between banks. This infrastructure runs 24 hours a day, 7 days a week, across nearly every country on Earth. Once built, it costs very little to scale. That creates extraordinary profit margins. This is one of Visa's most powerful advantages. When a Visa card is used outside its home country, Visa earns extra cross-border fees. Global travel, international e-commerce, digital subscriptions. As the world becomes more connected, this revenue stream keeps growing. Visa sells fraud protection, cybersecurity tools, data analytics, and consulting services. Visa sees global spending patterns in real time. That data is priceless. Banks and governments pay heavily for these insights. Visa generates tens of billions of dollars in revenue every year. Its profit margins regularly exceed 50%. That means more than half of every dollar Visa earns becomes profit. Visa's market value has reached hundreds of billions of dollars, placing it among the most valuable companies on the planet. And again, Visa achieves this without lending money or taking credit risk. Visa expanded by partnering, not fighting. It entered Europe by working with local banks. It entered Asia through joint ventures. It expanded in Africa by enabling mobile payments. It grew in Latin America by supporting digital banking. Visa operates in over 200 countries and territories. Every expansion increased the network effect. Every new user made Visa stronger. Visa has acquired fintech companies, cybersecurity firms, and data analytics platforms. These acquisitions strengthen Visa's control over payment security and data intelligence. Visa does not chase flashy consumer apps. It buys infrastructure. Visa is not a tech company in name, but in reality, it is one of the most advanced technology platforms in finance. It processes thousands of transactions per second. It invests billions in cybersecurity. It works with artificial intelligence to detect fraud. Visa's technology moat is enormous. Visa does not fight crypto. It integrates it. Visa works with crypto wallets, exchanges, and stablecoin platforms. Whether money is traditional or digital, Visa wants to move it. Visa benefits from network effects. The more people use it, the more valuable it becomes. Breaking into that ecosystem is extremely difficult. That is why even the largest tech companies partner with Visa instead of replacing it. Visa teaches a powerful lesson. Do not fight for customers if you can own the infrastructure. Charge small fees. Scale globally. Avoid unnecessary risk. This model can be applied to software, logistics, data platforms, and digital services. The future is cashless. More digital payments. More cross-border commerce. More automations. Visa is positioned to benefit from all of it. As long as money moves, Visa earns. Visa is not loud. Visa is not flashy. Visa is not emotional. Visa is efficient. It is one of the greatest money-making machines ever created. And now you know how it works. If you want more deep dives like this, subscribe to How Companies Make Money, because this channel is built for people who want to understand power, profit, and real business. Thank you for watching. And remember, follow the money.